Hi everyone, welcome to the weekly market update again. So as usual, today we'll be going through the upcoming weekly economy news followed by earnings reports. However, the thing is that we are coming to the end of the earnings reports, so nothing much more to mention over there, but there will be one stocks that everyone is eyeing on it is actually this Zoom video. There will be earnings report on the coming Friday, as we know that since the COVID, since the circuit breaker, Zoom has been going north all the way, and everyone is eyeing on this quarter. How do they perform on the figure to justify, and what is the guidance will be given for the next half of 2020? So if let's say you are not in holding any Zoom position at the moment, please just avoid it. If yes, if you for me, there's always some restrictions for myself that not to hold after the earnings. So if let's say you don't feel comfortable to it, right, then you can just either you liquidate your positions, sell off your positions, or you can sell a little bit sell a little bit more, or or short to hash it, do whichever you want, but not to enter a new position for Zoom video. Even though they are going to announce, I believe the reports will be good for Zoom video coming Friday. So for economic calendar for this week will be as usual, the starting first week of the month, the heavyweight will be on the non-farm payroll, on the unemployment rate. So as usual, if let's say, of course, if how does this news actually affect you is because if you're doing short-term trading, right, it will actually cause volatility at the point of time when you enter or you're holding the positions. So if you are doing position trade, then this is not a big news to you, but it will actually somehow give Trump and give them a point to shoot that faster push the stimulus as fast as possible. So if you are doing shorting or you are trading at a time of point on Friday or Wednesday or any week of this Wednesday to Friday, just go risk lesser amount. So that is all for the economic calendar. So based on last week news, things to what's the last week news is actually start off with this down. They actually have some changes. They actually remove three shares. Basically is they remove like Eon, they remove Pfizer and Amgen. Then they replace Salesforce, Honeywell, and Amgen in. Oh, I think they, let me see, oh yes, they will remove Eon and Gens to replace Pfizer and Honeywell. So this is the news basically. So what is this all about is that, you know, if usually when there's some replacement, right, for the one that actually added into down, right, will actually cause the shares itself to go up, because the fund houses that actually track down will have to buy more shares on the company itself to track the index, to track the ETF index lah. So that's why three of the major shares actually went up. But the thing is that one unusual changes is because, as we know that the replacement is like kind of like one industry to one industry, but they remove Eon and they replace Salesforce is actually a CRM, is a tech industry. So this is one of the puzzle, and Eon Mobile has been with down index since very very long ago. So right now, is it because of this oil plunge causing them to remove Eon at the point of time? So if you are not holding any shares of them, there is nothing related to you. So if you are looking for any opportunity, unfortunately, Salesforce and Honeywell, I think they actually went quite high, only left Amgen. So this is one point to take a look. Next will be, yes, this is the big news, is actually the Powell announcement. So what is the Powell announcement? Is basically they are trying to target the inflation of 2%, but they want to keep the rate lower, the interest rate lower for a longer period. So usually when inflation rate go up, right, Fed will actually tend to increase the interest rate to control the inflation, because as you know that your $100 couldn't buy what $100 last year or the year before. So they will usually increase the interest rate to make your value, the dollar value, the currency stronger. But this time round, they're going to keep the interest rate for a longer period at a low level. So it's actually a good thing for the stock market. It's a good thing for borrower who try to loan more money at a cheaper rate. Good for people who actually took up those loan for housing, mortgage for educations. But however, it will affect the bond market. You see, if let's say you are in the bond market, the treasury yield all will be lower because the coupon rate will be lower. So it's also bad for saver who actually put their money in fixed D in bank to earn those kind of penny interest. So the thing is that right now, why it pushed the stock market, because people don't see putting their funds in treasury bonds, in fixed D. They will try to spend their money right now because a dollar today does not worth a dollar tomorrow. So they will try to put into the stock market or into gold right now, because right now stock market is at a at a high side. As I say, we are all at a high time, all-time high, and people is talking about bubble. So they will try to go into the safe haven asset like gold. But the thing is that, as we know, gold is actually going, it just pulled back from 2000. It's also all-time high, but they will choose to go into gold because theoretically, since long ago, gold has been categorized as safe haven. But beside gold, there is actually one another thing, is so-called an alternative safe haven that I will be going through later. So I will introduce this ETF later at the end of the video as well. So it's for the education purpose, but it's also, if you're interested, you can go and take a look and finish the whole video later. So next thing, last Friday, before the market open, actually Nikkei tumble. The main reason is because the Japan, the PM Abe actually resigned due to health concerns. But the thing is that, as we know, we are currently at this pandemic situations. Market is not very strong, it's very uncertain, and adding on this big news, right, it caused the market to be panicked because investors dislike uncertainty. So due to uncertainty, Japan Nikkei 225 actually collapsed almost 1.4% closing. So we'll continue to monitor. If you are in the Japan's market, watch out if you're holding any USD yen dollar. So watch out on the yen currency as well. So next thing is actually on the COVID. COVID right now, we are on the latest news I can find is actually the temperatures of the vaccines, because they found out that in order for the vaccine to be used, right, they require the ultra low temperature to store the vaccine itself. So this caused another disruption trying to make the vaccine go through lah. So however, the thing is that it's another hurdle, but Trump, he mentions that he is trying to target for vaccine to come out before the US president election fall on the November. So not sure how will they actually overcome this disruption. So we will continue to monitor. So that's all for the news for this week, and we will be going into the chart next. Okay, for the chart, as you can see, as I mentioned in my video last week, as what I predict using the Fibonacci extension, I say that S&P will definitely break the all-time high and will go even higher to the Fibonacci of 61.8%. Eventually, the last 5 days, it just keep going higher and higher and higher, eventually touches the 61.8%. As you can see, it's around 3005, just nice for under the Fibo extensions. So I'm not any god trying to predict where it can go or will there be any return. But if it successfully break, of course, it's the next level will be 3006 as a round figure. If not, this major line is actually a major resistance charted since 2009, which I mentioned in my last video from the last global financial crisis. So we will continue to monitor if there is any sign with a high volume of reverse candle, then you may actually to nimble a bit to shut it down. But otherwise, we continue to monitor as it touches what I've predicted or what I've charted at a Fibonacci of 61.8%. Alright, so this is quite accurate. So next thing, we'll recap of what I have went through or the chart that I have been sharing. Next is Walmart. Alright, Walmart, unfortunately, if you have followed my signal, I'm so sorry about that because we got stopped out. Main reason is because I entered is because of the news earnings the earnings report is very good, so I entered when the pullback, but the pullback is not strong. I didn't enter at the supply zone or the so-called the demand zone. So my stop loss is just a little like $1 away, and I got triggered. And before it actually bounced even higher to my take profit level. So eventually, in fundamentally, I'm right, but technically, I'm not accurate at this point of time. So I causes some I got TP stop loss for this position as well. But if you manage your position no manage your position wisely, right, you will not be affected. I mean, your portfolio will not be affected badly because there are other costs that actually we got some profit as well, right? So it should ever cover because my risk reward is always more than one. It's not just less than one. All right. So this is Walmart and other shares which I mentioned last week. I'm not going to go through again because I'm still waiting for the signal. And then if I see the signal is coming with the charting itself, I will give more trading signal. I will post it on the Telegram or the at the point of time. All right. So for this week, what are we be looking on? First, we'll start off with commodities, and as you guys know, basically is palladium. Let's take a look. All right. So palladium itself, right? We can see that it's forming a triangle. All right. And it's actually above the 20 days moving average. So basically, I'm giving a shot of going for a long if let's say it successfully break above here. But if it only successfully break above here, then I will go into it. Of course, trading signal will be provided in the Telegram as well, so I will monitor. But you can actually watch this Telegram in your watch list first, just in case. All right, so Telegram is one of the watch list. Next, we will go into CCL. CCL we know is Carnival Corps. I think 2 weeks ago I mentioned that it will actually went even higher. Telegram provided a signal. If you have followed, you should have made some money over here. However, based on the volume, based on the candle, based on the chart pattern, it's very good. So I might continue to monitor and give a second call on CCL once again. So like I say, signal will be provided in the Telegram as well. So continue to put this in your watch list. All right, Carnival. There are so many crews out there, but I choose Carnival is because of their cash flow. They are actually rich in their cash flow. They have their debt is low, so they're able to withstand these pandemic situations. You know, they have cash to burn. That's why Carnival is one in my watch list. All right, next thing I have here followed through. I have actually asked to short NUS. It's a new skin enterprise. Reason is because first of all, it's after the XD, and after the XD itself, right, the price didn't drop. But right now we can see that actually NUS is actually at the support term resistance level. All right, support term resistance level. If you go take a look in those kind of fund house give the report, right, they actually say that their target is only $50, $49, which just nice fall under the support term resistance level. So I give a shot because the stop loss is just way above. All right. So, however, it actually went down and there's a spike on Friday. It's due to why? Because of this reason. Herbalife. All right, Herbalife is actually another thing. Is also doing like MLM like that. Actually, NUS is also something related to MLM. They are selling those kind of health conscious products. So same as Herbalife. So they actually admit that they bribe Chinese official to grow overseas business, and they have been bribing since 2007, if I'm not wrong. You can go read more about it. Basically, but if the thing is that I know Herbalife is big enough, they are the billion-dollar company. But the thing is that if let's say they have been doing this kind of hanky panking since 2000 when, of course you will be worried on this kind of what happened to uh their teams. You get what I'm trying to say, to this company itself. Is there any more dark side that has not been opened up or have not been discovered? What happened if it has been discovered? This causes the spike of Herbalife at the point of time as well. And beside that, I think there's one bigger investor actually reduced the stake of Herbalife as well, so causing the huge spike, huge tail line on last Friday with high volume. So I will continue to monitor and on these two shares as well. All right, so that's all for this week's sharing. And next thing, like I mentioned, there's one ETF as a asset. Is actually the safe haven, which I will treat this as an education, but there's also opportunity to long and short as well. So for the education will be all right. So what will it be if let's say the interest rate decline or the interest rate is going to be at a low side for a long period? Usually people will tend to go into different portfolio, but this is a seven type of portfolio people are looking into. It's utility, healthcare, consumer staple, mid cap, commods, dividends payer, and farmer. All right, pharmaceutical. But the thing is that first, dividend payer out. Why? Because right now we are at a COVID. Correct? Dividend will be cut. Next, pharmaceutical is quite volatile. It's because of the COVID vaccines. You never know which one success, which one fail. Next, commodities usually is gold as mentioned over here. But gold all time high, you are not going to chase it as well. All right, consumer staple and mid cap is also at an all-time high if you go look at the ETF. So next is left utility and healthcare. First is actually usually is utility. That's why utility is one of them I'm going to introduce. So first, let's start off with why utility. By looking at the utility ETF, you can see that this is the utility ETF. All right. So we can see that you can check other ETF like financials, like consumer staple, discretionary ETF. It's all breaking before the pandemic. All right. But right now, only health sector, if I'm not wrong, only I think it's oil sector, finance sector, and utility sector has not break. So why? Because if let's say market is so good, right, no one will want to go into this kind of defensive counter. They will go into technology, go to consumer staple or discretionary. That's why utility is right now starting at the range level. All right, it's 50% since the between and after the pandemic. One big four is between 50% Fibonacci. We can see from here. Let me draw for you guys. So we can see, all right, it's very obvious. Correct? Not? It's at the 50 to 61%. So the thing is that I'm choosing utility. Why? Reason, as you can see, forget gold, bet on utility. Even there's this kind of article saving. So utility ETF is one of the safe haven, and you can go Google more about what is utility if you are keen. I will share the link in my Facebook page later in the Telegram as well. So as you can see, how investors trade utility over here. So utility stock pays reliable dividends because everyone need to use utility. You need to use, don't tell me you don't use electricity, you don't use water, right? So investors often favor them over low dividend paying equity. So during the crisis at 2008, when Fed cut the interest rate, there is low uh, as a result, more investors will flock into the utility as a safe haven investment portfolio. So this is actually a defensive counter. So it's when the economy improves, when interest rate rise, investor can find higher yield out there, then they will shift out. So right now, interest rate cut remain low, but stock market, everyone will flock into stock market. Yes, but stock market is all time high. So in order to play some defensive move, right, you should look into utility ETF as well. All right, so that's why I introduced utility ETF, or one of the counter which I mentioned under the utility ETF holding. Basically, is called WEC Energy Group. All right, WEC, this is the stock counter. So based on the chart, like I say, is similar to the utility ETF, but last Friday closing with the up candle above all moving average with the decent volume coming in, I am putting my bet on this company itself. All right, but of course, trade signal will be provided, not to worry. So I will continue to monitor. You can actually add this into your watch list if you're keen. All right. So that's all for my education for this week and my market update. Hopefully you can give me a like in my Facebook page when I'm posting. Continue to follow my weekly market video. That's all. Thank you very much. Have a nice day, everyone. Bye bye.